There is a very, I think, structural problem, and I think government has to address that.
You talked a little bit about income inequality, but if you look at class mobility rates, average household income for middle-class families, measured with inflation, a lot of these rates have been trending down since the 1970s. And some may argue that it's harder today for the middle class than it's been in 30 years. And I was wondering if you had any more thoughts on how a rising tide can lift all boats and not just the yachts.
Yeah. There is a very, I think, structural problem as a market system gets more and more specialized. If you go back to an agrarian society like we had a couple hundred years ago with most people working on a farm, most people fit most job requirements. I mean, it was that as the world has become more and more specialized, I think we keep moving away from that. So a market system will not pay well for a significant percentage of society. They aren't needed to keep GDP itself going up and people at the top. And I think government has to address that. I sometimes toss out to students this proposition. Imagine that it's 24 hours before you're born and you're sitting there, Johnny or Joni, we don't know yet, and you're in the womb and a genie comes. And the genie says, John or Joni, you strike me as a remarkable potential human being, and I'm going to give you an enormous responsibility. I'm going to let you decide the world, how the world is going to work into which you're going to emerge. You can decide on the economic system, the social system, the political system. You design it. And whatever you design, that's going to be the system in which you live, your children live, grandchildren live. And you, being wise beyond your minus 24 hours of age, say, I know all about you genies. What's the catch? And the genie says there's one catch. Just before you emerge, having designed the system, put it in cement, you're going to go over to that barrel over there that has 7 billion slips in it, one for every human being in the world, and you're going to pull out a slip. It may say male, it may say female, it may say white, it may say black, it may say infirm, it may say strong, it may say bright, it may say below average, it may say United States, it may say Bangladesh. Now, not knowing which ticket you're going to pull out, what kind of a world do you want to design? Well, you certainly want to design a world that produces lots of goods and services and keeps producing more and more. You want a lot of stuff around. It could be the world's fairest society, but if it's on a barren desert island, it isn't going to do anybody good. So you really want something that works in terms of output. But once you have something that works in terms of output, you certainly want something that eliminates fear from everybody's life. Now, that doesn't just mean a lot of cops. It means fear of old age, fear of health, all of those problems. And you certainly want a system not knowing what tickets you're going to get that takes care of the people that don't survive so well in that market system, which maximizes the amount of output, your first goal. And I think we've done a wonderful job at the first stage. We have learned how to turn out lots of stuff. We have not thought as much, although we've thought a fair amount. I mean, when Social Security came in and all of that, this country has developed in terms of thinking about how a rich family should behave. But I think we are in the stage where we need to focus more on making sure that the people who get the bad tickets do better than they are. And we said that blacks were 3/5 or slaves were 3/5 of a person back when we started. We said all men are created equal in 1776, and in 1789 we said blacks are 3/5 of a person. We not only said all men are created equal, but in the Gettysburg Address, Lincoln repeated it. It was 1920 before we passed the 19th Amendment for women. So we treated women as an essentially different class for all those years. So I think we've gone significantly in the right direction in terms of behaving better as a society. And I think we've gone terrifically in the right direction in terms of turning out lots of stuff. But I think we have to address the question of how do you treat the people that are left behind in a system that maximizes the output of goods and services. And that can only come through government.
It's no doubt that you're an outspoken fan of Ben Bernanke, but he's going to be stepping down in January of next year. Whomever takes over the position, do you think that they should continue the Fed's controversial buyback program? And if so, for how long?
Well, I think they should take Bernanke's approach, which he says he's going to keep doing it until he sees more improvement in the economy. And I think he's been mildly disappointed in the rate of improvement in the economy in the last few years, and therefore the other day he said he's going to extend it further until he sees it. So he's not prejudging exactly when it's going to happen. He's telling you the conditions under which he'll change, and the economy is getting better. We are in an experiment which hasn't really been tried before. Fed has a $3.5 trillion balance sheet and selling securities, as sometimes people find out. So we don't know how this game plays out. And just the announcement, whenever it was a few months ago, or the hint that tapering was going to occur, that had some significant market reactions, probably 100 basis points or so in the 10-year. And what will happen if they actually try to deleverage the Fed? I mean, what has happened is the American public deleveraged and the government leveraged up through the Fed. When the Fed deleverages that in any big way, that will be a new experiment. And the Fed is the greatest hedge fund in history. I mean, you've got $1.1 trillion financed by currency and circulation, which doesn't cost anything, and they got about $1.8 trillion or $1.9 trillion from the banks at 25 basis points. And I mean, the Fed is going to make $80 billion or something like that. The Fed is the fourth largest contributor to the United States government's revenues that there is now. That wasn't the case a few years back, but it's 80 or 90 billion a year probably. And it is under no pressure, none whatsoever, to have to deleverage. So it can pick its time. And if you have somebody wise there, and I think Bernanke's wise, and I certainly expect his successor to be, it can be handled. But it is something that's never quite been done on this scale. It'll be interesting to watch.
Would you think is the most important thing, the key in evaluating a company?
The most important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out in Seattle, and Bill said, "You've got to have a computer." And I said, "Why?" And he said, "You can do your income tax on it." I said, "I don't have any income. Berkshire doesn't pay a dividend." He said, "Well, you can keep track of your portfolio." And I said, "I only have one stock." And he says, "It's going to change everything." And I said, "Well, will it change whether people chew gum?" And he said, "Well, probably not." And I said, "Well, will it change what kind of gum they chew?" And I said, "Well, then I'll stick to chewing gum and you stick to computers." I don't have to understand all kinds of business. There's all kinds of business I don't understand. But there's thousands of opportunities there. I did understand the Bank of America. I'm able to do that. I'm able to understand in investing, there's no called strikes. People can throw Microsoft at me and any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day. And only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things if you can spot on Amazon, for example, I mean, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy too. But could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America. And I formed an opinion on Coca-Cola. I mean, Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, and probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future.